Welcome to the Small Business Tax Savings Podcast, powered by Jetro. Each week, we bring extremely valuable accounting and tax tips specific to small business owners. You will be on your way to growing your business and putting more money in your pockets. Here's your host.
Hello and welcome back to another episode. Today's topic is on retirement plan and the deadlines that you need to consider. Now, we have special guest Matt Ruttenberg back with us. We did a whole series on retirement plans earlier this year. So if you have not checked those out, be sure to check into those, where we go into the details of each and every retirement option available. Now, before we get into that, this episode is brought to you by the Tax Minimization Program, which is a training program to ensure that you pay the least amount in taxes as legally possible. I am your host, Mike Jesowshek. So Matt, welcome back to the show.
Hey, Mike, thanks. How you guys doing?
Good. It was it's been a while now since we've talked. I know we did that series earlier in the year. We talked about all sorts of retirement options, kind of what is good for those with no employees, what is good for those with employees, kind of the details of it. And we wanted to bring you back to go into some of the deadlines around some of these retirement plans. And I think that's key now. Now's a good time to be doing that because, you know, everybody's doing tax planning now, or they should be doing tax planning now. We're looking at strategies. What can we do to minimize our tax liability? So we're doing that tax planning right now. A lot of time that comes with a retirement plan. We're comboing that into some type of tax saving strategy as well. And now's a great time to be doing it because we have plenty of time left in the year. You know, we're about mid-year, so it's not like we're kind of scrambling at year end or anything like that. And that's why we want to talk about the deadlines today, so that as those deadlines start to come up, people can be prepared and we can kind of make moves prior to that coming down. So Matt, I'll kind of open up the door to you to kind of start the discussion. What are some of the deadlines that we need to think about for the various kind of retirement plans?
Yep, absolutely. So in a normal year, I think April 15th is our filing date for the most part. And I want to start this from the bottom and go up. In our previous podcast, we talked about the amount that you want to contribute. So let's just start with an IRA, and this is perfect for anyone who's really trying to save less than $6,000 per year at the moment. They're not ready to implement a full retirement plan. And this is just for them. They don't have to worry about employees or anything at this point. And then they have the $1,000 catch up if you're over 50. And this is really the only date you have to worry about on this is April 15th. And that is for the previous year. So you have up until April 15th of the following year to be able to contribute for the previous year. You don't have to open it up until that point, and you just have to do a contribution up until the day you file, and that's as simple as that.
Now, Matt, just a question on that, and it's a question we've had here. So if you're listening to us, obviously April 15th is over with, but something to consider next year. If someone files an extension, does that date to make that contribution for an IRA extend as well, or no?
Good question, and the answer is no. Not just for an individual IRA, either whether it's Roth or a traditional IRA. April 15th is the hard deadline on a normal year for the previous year's contribution.
Okay. Excellent.
Yeah. And really the next step up for self-employed folks is the SEP IRA. This is probably one of the more popular ones, especially for those who don't have employees. Maybe they're solo entrepreneurs, or even if they're just independent contractors themselves, where they can do up to $58,000 a year, or 25% of your compensation in that of contributions for that year. Now, this has not changed. This has been in effect for many years. This was at one point the only option that you had to contribute after the deadline if you want to do more than the traditional IRA of $6,000. So this one actually does include the extensions that you were explaining earlier, Mike. Mm-hmm. You can actually do a contribution for the previous year up until your filing date, including extensions. And these are considered employer contributions. So these are actually coming from the company. And this will be the next step up. So you have up until, October to file an extension the SEP IRA.
Great.
Now, beyond that is the individual 401k plan. So we're kind of still in the ballpark of the solo entrepreneur or the independent contractor, where you can do an individual 401k or a solo 401k that often is called. Now, this one's calculated differently than the SEP. So there's actually a couple different deadlines here. I want to split this up. In the 401k world, you have your employee contribution. Even if you're self-employed, you're still considered an employee, or you have your employer contribution. The employee contribution, which is up till $19,500, or if you're over 50, you can add another $6,500 on top of that. But this one is in the calendar year. So December 31st, the account needs to be opened and contributed to for the employee portion of the 401k plan. But now we're talking about the employer portion. So this changed, I think it was back in 2019, the Secure Act had passed. And this actually changed a lot. This is a huge change for the industry. And it allows you to open and contribute to a 401k plan up until the day you file, including extensions.
Okay.
So very similar to the SEP IRA. So if you wanted to, and that has the same calculation, very similar calculation as the 25% of your compensation. The difference is you can stack that 25% on top of that 19,500 to be able to get a little more favorable calculation for your contributions. So the individual 401k, just to sum that one up, because it has a lot to it. The employee portion, which you can contribute 100% of your income into, is December 31st. Then the employer portion is including extensions, the filing date, including extensions.
Now, I do have a question on that, Matt. Let's
Yes.
say we have a client that comes in on February 12th. They didn't make any employee contributions. Can they still, because the employee contributions are due 12/31, can they do just employer contributions, or at that point kind of out of luck?
Good question. No, employer contributions are fine. Okay. And that includes yourself. So if you have employees and you're into the following year, employer contributions are just fine, and that goes all the way up to the extension date of your filing. It's just the employee portion is where you're limited to the December 31st. Okay. So that kind of is a good segue. Let's kind of start talking about. Actually, before we do that, I wanted to go on kind of more of a higher level piece of the 401k plan. We talked before, for high net worth or high income earners, where you can stack something called a cash balance plan on top of the 401k. Mm-hmm. That has the same deadlines as the employer. Those are always considered employer contributions. So the cash balance plan, where we can get you up to 6 digits of contributions, that also is the up till your filing date, including extensions for the previous year. So that as well as the profit sharing employer portion.
Okay.
All right. So going into the group plans, I think this is where a lot of folks are in this boat. And really, I want to say the entry level, it would be the simple IRA, where you have 13,500 is what you can put into it. They have a catch up on there for 3,000. This has now we're going to start talking about implementation deadlines within the year that you're wanting to start the plan. So this one actually has to be started by October 1st of the current year. So if you have employees and you're starting a simple IRA, October 1st is your deadline for that current year. If you don't make that deadline, you have to wait until January 1st of the following year, and then you are not able to do any contributions for that current year. Okay. So that's pretty important. There's another deadline we'll talk about with that too. But let's say you're an employer that has a simple IRA plan in place, and you're looking to make a change to a 401k plan, just because the more favorable calculations, the more favorable contribution limits, and you can maybe manipulate and change the matching investing schedules, you cannot make a change within a calendar year, within the same calendar year. So if you have a simple IRA and you're looking to make a change in March, you cannot make that change until January 1st of the following year. This is a common mistake that we see, especially for employers that are self-implementing a 401k plan. A lot of times they'll kind of forget that the simple IRA is in place. But I guess the best advice I can give anyone on this one is just remember you can only have one retirement plan in place at any given time, as far as where the employees can put their money into it. So that does not count, the 401k with a profit sharing plan. That's okay. But you cannot have a simple IRA and a 401k in place in the same calendar year.
Makes sense.
Yeah. So that has to wait until January 1st of the following year. Now, let's kind of segue into the safe harbor 401k, because, the 401k has different kinds. There's the traditional, 401k where you can pick and choose your own matching investing schedules. But then you have the safe harbor 401k, which allows the employer to max out their contribution limits up to $19,500, regardless of what the employees are contributing to their own account. It bypasses the required testing that you have to do every year in a 401k plan. This has the same implementation date as the simple IRA of October 1st. Now, this is something that takes about 30 to 45 days to implement. So getting things started in July, start looking around for who you want to work with in July is probably the end of the line that you want to get going on that, because it does take time. It's not a quick open the account. October 1st is a hard deadline. Otherwise, they'll have to push it back to January 1st of the following year in order to have a plan put in place.
Okay.
So the same conversation goes with the individual 401k plan, where there's an employee portion and then there's an employer portion. So every 401k plan out there, whether it's an individual 401k, a solo K, safe harbor 401k, or just a traditional 401k, they both have the employee and the employer portion. The same deadline goes as far as the employer. You can actually implement and contribute the plan all the way up until the day you file, including extensions. So you don't even have to have the plan open in that calendar year to do that. You can actually open it and then contribute, as long as it's done before the day before you file your taxes, including the extensions. So hopefully that makes sense. There's a lot of wheels turning in the 401k world, but that's the same deadline goes whether it's an individual or a group 401k plan.
Got it. So if you wanted so just to confirm, with an individual or a solo 401k, you can open that up after a year's over and fund it, at least for the employer contribution. Employee contributions you wouldn't be able to do. Same thing with a safe harbor 401k or a traditional 401k. You can open it up, let's say February 15th, the year after. You could open that up on a traditional 401k and fund employer portion for the prior year at that point.
Yep, absolutely.
Okay.
Yep. And honestly, with the traditional 401k, that October 1st deadline does go away. The only thing you have to do is have it done by December 31st, but you do have to notify your employees ahead of time. So we like to say, November 1st is probably is the deadline when you want to implement a plan for the current year, traditional 401k. And again, the traditional 401k is where you can set your own matching investing schedule. And a lot of times, if we go past the safe harbor deadline of October 1st, we'll start the traditional, and then we'll make changes next year and into a safe harbor if we have to get something going for that current year.
Oh, that makes great sense.
Yeah. So that kind of covers all the deadlines as far as the 401ks and all the different kinds of IRAs are concerned. Outside of that, it's just that 45 to 30 day window to really get yourself started to do your research. Mike has a lot of resources on his website to see which one is the best for you, and we can help you out too. Feel free to reach out to us anytime. We can kind of line that up and see which one is for you, because there's a lot of wheels turning in these retirement plans sometimes.
Yeah, no, I definitely understand that. And just so everyone knows, I'll put Matt's information and a link to a website in the show notes if you guys want to check that out. But I just kind of want to summarize what we've talked about as far as the deadlines. And I think when we do that summarization, it's important to kind of break it out into two pieces. We have those plans that are made for employers that have no employees. So that would be the owners, maybe a spouse, child, something like that. And when we talk about those plans, we have either a SEP IRA or a solo or individual 401k. We also have just a traditional IRA, and that's just going to be for individuals, not really business related. The deadline for a traditional IRA, this would just be for a regular everyday individual, is April 15th. Hard cutoff deadline, no extensions on that. But if you have a SEP IRA, or if you're an employer, you're a business owner where you do not have outside employees, you might want to look at a SEP or individual 401k. And with a SEP, the deadline is April 15th or your extension deadline if you decide to extend, which would be October 15th. Now, if you have a solo 401k, any employee contributions have to be made within the tax year. So 12/31 would be a deadline of that. But the employer contributions can be made up until the day of your filing, or any kind of extensions again, which would be potentially 9/15 for a situation like that. Did I get that right, Matt?
Yep, absolutely.
And then obviously that cash balance plan, which is kind of considered employer contributions, follows that same line as the employer side. So day of filing, including any kind of extensions that you might have.
That's right. Absolutely.
And then if we flip the page and say, okay, let's look at these employers that have other employees outside of the owners and maybe a spouse or something like that, we kind of look at what their deadlines are. And really when we look at the options for retirement, some of the biggest ones are that simple IRA. And you mentioned that one has to be started by October 1st of the current year. If you don't have it open by October 1, then you'd have to wait until January 1st. You can obviously, let's say you missed October 1. You can obviously start to get some of that paperwork ready so that January 1st, you're now making sure that you're ready. I know we had a client that got hit like that. It might have even been us. I can't remember, but we're like, let's get this thing started. And they're like, yeah, you can't come to us a day before the deadline and open it up. So we just moved it to January 1st. But then when you look at the 401k, Safe Harbor traditional, the Safe Harbor 401k also has that October 1 deadline. So you have to have it open by October 1, and usually it takes, say, 30 to 45 days to implement and get everything set up. So you want to really start that conversation, July and August, to really make sure that you're able to open up by October 1. Otherwise, it's pushed back to January 1st.
That's right.
And with a traditional IRA, you got till the end of the year to open up. But again, you're going to have to notify employees and kind of do some of those initial setup things. So, November 1st would be a good time to get on something like that as well. That's
right. Yep. Anytime you make a switch or add a plan, you have to notify employees, and there's a window that you have to do that within. And if you don't do that, then that pushes back things even further. So once you're past the January 1st, anytime after that is fine, as long as you get those notifications to the employees are out there. So.
Yeah, that makes sense. So I would say, let's, as part of this episode and kind of the reason that we're timing it for this time is that we have time now. What I would say is we have time, but make sure you utilize that time wisely. If you're looking about a retirement plan, either for you have employees or you're looking for it for yourself as a solo business owner, start doing your research now. Like I said, we've done a whole series on retirement options earlier this year. Check out our website, check out our podcast. I think those were posted around the January, February timeframe. Mm-hmm. So check those out, find out which plan's going to be right for you. Start to do your own research. I'll also include in the show notes a link to Matt's website where it has breakdown of all the plans as well. Start that research now as you're listening to this, as it's fresh in your mind. And that gives you, say, a month of research. And then you can start that implementation once you're like, okay, yep, I'm going with the solo 401k, or I'm going with a QACA Safe Harbor 401k, whatever it might be. Once you've made that decision, maybe 30 days from now, you have plenty of time now to notify employees, make sure you're setting up your plan. I always tell clients that, we talked about the dates, and we have some that are 12/31 dates and things like that. But if you're looking to start a retirement plan this year, let's forget about the dates and let's just say, let's do the action now. Let's make that action today. Right. And let's not worry about an October 1 or anything like that, because if we just do the action today, everyone's going to be fine. You're going to be fine if you start to open your plan and start that process now, today, you're going to be fine. If you wait till September to start that process, you might be starting to get limited on different plans that are available, at least this year, and then you might be pushing it to next year. So, I always say take action today. Now, when we have time, this is a great time. As we talk about on the podcast a lot, tax planning should be done around this time, mid-year, because we have plenty of time to implement the strategies we want to. This is part of that implementation stage, getting a retirement plan opened up, if that makes sense for you.
Yep, so. Absolutely. And figure it out. And one thing I wanted to mention as well, there's nothing wrong with having the conversation in, April, March, May. But it's okay to say, let's get this thing going on October 1st. You don't have to open it just because the conversation started. You can have this thing opened, whenever you want, as long you can push it back. It's just having the conversation and trying to figure out your options is number one.
Yeah, no, that's excellent. And like I said, I am going to be including a link to Life Inc., which is where Matt's from. And on the bottom of that link, there's an area to request a call. So you can talk to Matt. You can just say, hey, Matt, here's our deal. Here's our situation. What would you recommend that we get set up with? You don't necessarily have to come to Matt saying, we're doing a solo 401k or whatever. You have that ability to talk to somebody on their team that can kind of really help you out in there. So if you are on the fence or just kind of wondering like, hey, I know I should be doing a retirement plan, but I just never got to it. I've never put my focus on it. Where do I start? I think that would be a great place to start that process.
Absolutely.
Awesome. Well, Matt, I appreciate you coming on. I know we've had a lot of you on the show this year, and it's been awesome. I've heard a ton of feedback about just the information about the retirement plan options and just helping the listeners really understand what's available out there. And this stuff can be confusing. There's a lot of numbers. There's a lot of moving parts. There's different dates. Everything is different for every single one. And so it can get kind of confusing at times, which has really been helpful to kind of break that down into pieces and say, okay, let's look at one piece at a time so we can understand that structure. So I just want to thank you again for not only this episode, but taking the time early this year to jump on with us. It's really been a pleasure, and there's been great feedback from the listeners.
Great to hear.
Thanks, Matt.
Thanks for having me on, Mike. I appreciate it.
This has been another episode of the Small Business Tax Savings Podcast from the team at Jetro. If you enjoy our weekly episodes, please leave a review on whatever platform you listen to us on and share with other business owners. If you have any questions or future topics you want to hear, email them to tax@jetrotax.com. Thanks for listening and have a great day.